life looking a little less rosy now for you?
If you're just thinking of last 6 months, I'll say it's been challenging. If you're talking about the last 6 years, it's been great 6 years. And the next 6 years is going to be better. Now, in terms of go, it might be go, take a pause, go again. But in a 30, 40-year journey, which is where you are pursuing your passion to an extent where when you take that long view, everything is supposed to work. So in terms of what education and the role which we have to play, being a pioneer in this sector, like everyone else who grew fast, we have also made our fair share of mistakes, but there is always a strong intent to correct each of those mistakes. It's been a learning exercise. Over the last 6 months, we have learned a lot more in terms of how to adjust to the current macro environment, where it's not about growth. It's finding the right balance between growth and sustainable growth. We are in that phase where we are able to, we are already making the shift towards how do we build something which will last for decades.
Before you came in, some of the leading lights of India Inc. were with us, and they had a bit of a snigger when we didn't have the cameras on, saying, see, we always told you so. You were getting excited about the likes of Byjus, about Paytm. When they're in the private equity rounds, life is very different from when they hit the public markets and real questions are asked, because Byjus was chasing valuation, not necessarily value.
For us, that's completely misunderstanding, because it was never about chasing valuation. We were also creating a lot of value, because unless and until we were creating that value, there was never you can never continue growing your valuation. There was a time during the last 2 years when like we were growing very fast, and now it's a time where the valuation will also depend on not just growth but profitable growth. But if you take a deep look at our business models, they are fundamentally strong business models. At the end of the day, if you are able to make sure that students are engaged and they are also seeing positive outcomes, our retention rates are like close to 80%. And unfortunately, they are not there. You're not talking to students. They are not on social media. So it's a very long journey. It's a huge responsibility, because we have to make it work. It's such an important sector. We never started this as a business. At the end of the day, it's like it ended up becoming one. We are in that pursuit of how to make it not just bigger, but more importantly better. And once you create that level of value, like there are not many. It's a very difficult sector. If you think of, there are not many large EdTech companies. This is a sector which can be defined by Indian companies, and so there is no option. Like we have been, if you see over the last 6-12 months, like the objective indicators. What are the real objective indicators? Those who are closest to the action. There's not a single top level exit. And they are the ones, because if things are really wrong on the ground, you will see a lot of them leaving.
Let's talk a bit about how Byju's is doing at this moment. When you declared your results for last year, you declared a loss of $550 million. Revenue fell 3% in comparison with the previous period. And you declared results after a delay of 17 months. And when there is that longer delay, everyone starts wondering, dal mein kuch kala hai.
But proof, you can see when the results came out, there were multiple reasons for delay, which we have explained many times, like being apart from, because during those the last 2 years, we made so many acquisitions. It was not just organic growth. When we saw an opportunity that the online learning is suddenly becoming popular, not just in India, but all over the world, we made some really good acquisitions. Now, that came with the complexities of integrating those companies and one-time acquisition costs, which, like 2020, we were almost profitable. So it was when we were growing organically for the first 5 years. It was not growth at any cost. It was never like that. First 10 years, we were bootstrapped from 2005 to 2015. So it's in our DNA to, if you want to switch back to efficient, profitable growth, where like when those 2 years when cheap capital was available, everyone was chasing growth. If we were not doing that, we won't be in this position today. We are in a very good position. I know we have gone through 6-8 challenging months, but on the other side of it, the worst is over. But more importantly, we made these strategic acquisitions in India and in US, which will. As I've told in my previous conversations, 2022 is a defining year. Now, from growth to sustainable growth. We have already made that shift. We are only a few months away from hitting profitability at the group level. 2021, the numbers which came out eventually, like we got a report with no qualification. There was a recognition change, and that's why 21 numbers took a hit. But once you see the 22 numbers over the next few months, you will see that things are moving in the right direction. Both we've significantly grown that business, and so revenue growth and losses have like almost halved in the subsequent year.